Welcome to Safe, Simple, Sound, Tax Edition. I'm your host PK. Today we have an exciting episode lined up where we use AI voices to bring tax concepts and strategies to life in an approachable way. But before we dive in, please note this podcast is for entertainment and educational purposes only and does not constitute tax, financial, legal, or professional advice. Tax decisions should always consider your personal circumstances, filing status, and specific situation. Be sure to consult a qualified tax professional before making any tax related decisions. If you would like personalized guidance, you can reach out to me at safesimplesound.com/contact. Now, let's make taxes simple and sound.
Hey everyone, this is Alex, and welcome to third episode of Safe, Simple, Sound, Tax Edition. Please note that all tax amounts, thresholds, and deduction values mentioned in this episode are examples only. Tax numbers change annually, and you must use the current official values from IRS.gov when preparing your actual tax returns. Today, we're diving deep into the often dreaded but absolutely crucial topic of tax filing deadlines. This episode is based on a helpful section of IRS document P17 Part 1 titled When Do I Have to File? It provides a fantastic overview of the IRS deadlines and helps us understand how to avoid those pesky penalties and ensure timely tax submissions. At Safe Simple Sound, we believe in seizing financial control and understanding financial choices, and knowing these deadlines is a huge step in that direction. This article highlights several key concepts, including the significance of the April 15th deadline for calendar year filers and the options available for those needing an extension. We'll explore how these concepts impact various individuals in different scenarios. We'll also examine the often overlooked topic of fiscal year filing, something that can trip up even seasoned small business owners. To make sure we cover everything clearly and concisely, we've broken down this episode into 3 key segments. First, we'll tackle the standard filing deadline and calendar year taxpayers. We'll hear from John, a salaried employee aiming for on-time filing, and Sarah, who's facing a last-minute filing scramble, a situation many of us can probably relate to. Then we'll move on to fiscal year filers and variations in deadlines. Here we'll explore the unique situations of Maria, a small business owner navigating her fiscal year, and David, a freelancer juggling multiple income streams. Finally, we'll wrap things up with extensions and special circumstances, where we'll consider the cases of Lisa, who needs an extension due to personal matters, and Alex, a U.S. citizen living abroad, grappling with international filing requirements. So, get ready to empower yourselves with the knowledge you need to approach tax season with confidence and, as always, in a safe, simple, and sound manner. Let's dive in. Our first scenario features John, a salaried employee with a pretty standard tax situation. He receives a W-2 and intends to file by the April 15th deadline. Taylor, put yourself in John's shoes. What steps should he take to ensure he has all the necessary documents ready for filing?
Well, first off, John definitely needs his W-2 from his employer. That's got all his income and withholding information. This reminds me of what we discussed in previous episodes about different income types. W-2s are for employees, 1099s for independent contractors. That's a key difference to remember. Beyond the W-2, are there other documents he might need, Sam?
Yes, there could be. If John made any charitable contributions, he'll want receipts for those. If he paid student loan interest or has significant medical expenses, he should gather those records too. And if he's itemizing, he'll need documentation for things like property taxes, mortgage interest, and other deductible expenses. Think of it like assembling puzzle pieces. Each document contributes to the complete picture of John's financial year.
So if I understand correctly, it's all about having a comprehensive picture. Even if John thinks he doesn't need certain documents because he's taking the standard deduction, it's still good practice to gather everything, just in case.
Exactly. You never know when a seemingly small deduction could add up.
Good points, both of you. Let's move to our second question about filing methods. Taylor, back to John's scenario. What are the benefits of filing electronically versus mailing a paper return for someone like him with a fairly straightforward tax situation?
Well, e-filing usually means faster refunds, which is always a plus. It's also less prone to errors since tax software does the calculations for you. Plus, you get confirmation that the IRS received your return. With mailing, you're kind of left wondering, are there any downsides to e-filing, Sam?
The downsides are minimal, especially for someone like John. One potential issue might be if you have a very complex tax situation, certain forms might not be supported by all software. However, John's W-2 income is pretty standard, so he's unlikely to encounter that problem.
That's a good nuance to bring up, Sam. So, for most people, the advantages of e-filing definitely outweigh the potential drawbacks. So let's quickly recap. Gathering all necessary documents like your W-2 and supporting documentation for deductions or credits is crucial before filing. For someone like John with a straightforward tax situation, e-filing offers significant advantages, primarily faster processing and fewer errors, compared to mailing a paper return. Listeners, take this advice to heart. Gather your tax documents early, don't wait until the last minute, and definitely explore online tax filing software. It can simplify the process and potentially get you a faster refund. So we just talked about John, our diligent salaried employee who's all set to file on time. That's definitely the ideal scenario. But let's face it, life happens, and sometimes we find ourselves in a bit of a time crunch. That brings us to Sarah's situation. Sarah, like many of us, has been procrastinating. It's April 14th, and she suddenly realizes her taxes aren't filed. She's understandably worried about penalties. Sam, Taylor, what options does Sarah have to avoid those penalties, and what should she do right now?
The good news is, even though it's down to the wire, Sarah still has options. Her best bet is to file for an automatic 6-month extension using Form 4868. This pushes her filing deadline to October 15th.
So if I understand correctly, filing Form 4868 gives her more time to actually submit her tax return, right? But it doesn't change the date her payment is due.
Exactly. The extension is for filing, not paying. She'll likely owe interest on any unpaid tax, and if she significantly underestimates her tax liability, penalties could still apply.
That's a crucial distinction, Taylor. Think of it like asking for an extension on a library book. You get more time to return it, but you still accrue late fees if you haven't paid any outstanding fines.
That's a helpful analogy. So what are the immediate steps Sarah should take? It's already almost the deadline.
She needs to file Form 4868 today, either electronically through an IRS e-file provider or by mailing a paper form. It's crucial she gets it postmarked by April 15th. Also, even though she's getting an extension, she should estimate her tax liability and pay as much as possible with Form 4868. This will minimize potential interest and penalties.
Right? Even if she can't pay the full amount, paying something is always better than nothing. It shows good faith and reduces the amount accruing interest. Sam, how does she estimate her tax liability if she hasn't even started preparing her return yet?
She can use last year's tax return as a starting point, adjusting for any major changes in income or deductions. There are also online tax calculators that can provide a rough estimate.
This reminds me of what we discussed in previous segment about gathering tax documents. Even though Sarah is filing for an extension, she still needs all her W-2s, 1099s, and other relevant documents to accurately calculate her liability, right?
Absolutely. Getting those documents together should be her top priority, right after filing the extension.
So to recap, if you find yourself in Sarah's shoes, don't panic. File for that extension using Form 4868 immediately, estimate your tax liability, and pay what you can. And Taylor's right, start gathering those documents. Don't panic. File for an extension if needed, but prioritize filing as soon as possible. So, Taylor, we discussed Sarah's situation scrambling to file on April 14th. That's a good reminder for everyone about the importance of planning ahead. But not everyone files based on the April 15th deadline, right, Sam?
Exactly, Alex. Many businesses, especially smaller ones, operate on a fiscal year, which might not align with the calendar year. That's what we'll cover now.
Right. Let's move on to Maria's scenario. She owns a small business and uses a fiscal year ending June 30th. She's a bit unsure about when her tax return is actually due. Taylor, how do you think Maria would figure that out?
Well, we talked about April 15th being the deadline for calendar year filers. So for a fiscal year, it probably shifts, right? Does she just count 4 months from June 30th?
You're on the right track, Taylor. The rule for fiscal year filers is that their return is due by the 15th day of the fourth month after their fiscal year ends. So for Maria, whose fiscal year ends June 30th, we count 4 months forward: July, August, September, October. Her deadline would be October 15th.
So if I understand correctly, it's not about the specific date within the month, just the month itself. Like it wouldn't matter if her year ended June 1st or June 30th, her deadline would still be October 15th.
Precisely. The key is the month the fiscal year ends. Now, Alex, you mentioned a second question for this scenario.
Yes. What are the implications for Maria if her fiscal year deadline, October 15th, happens to fall on a weekend or a holiday?
That's a good question. It would be frustrating to miss the deadline just because it's a Sunday.
The IRS has a rule for that. If the due date falls on a Saturday, Sunday, or a legal holiday, the deadline is extended to the next business day.
So, let's say, hypothetically, October 15th falls on a Saturday.
Then Maria would have until Monday, October 17th to file, right?
Exactly. This weekend holiday rule applies to all filing deadlines, whether it's the standard April 15th or a fiscal year deadline.
This is a good point to recap. For our listeners using a fiscal year, remember that your deadline is the 15th day of the fourth month after your fiscal year ends. And importantly, if that date falls on a weekend or holiday, you get a little extra time to file. This is very different than Sarah's situation, where she just procrastinated. Maria is following the rules. She just needs to know what her specific deadline is.
This reminds me of what we discussed earlier about filing methods. Does the weekend holiday rule apply to both paper filing and e-filing?
Absolutely. Whether you mail your return or file electronically, the extended deadline applies. Just remember, if you mail it, the postmark date determines whether you filed on time. Use registered or certified mail for proof.
Great questions, Taylor. So we've covered how Maria, a small business owner, figures out her filing deadline with a fiscal year end. Now let's look at another fiscal year situation, but with a different twist. Let's consider David, a freelancer juggling multiple income streams. Before we move on, everyone, make a note. Understand your fiscal year end date and mark that specific filing deadline on your calendar. It'll save you a lot of potential stress and penalties down the line. So we just talked about Maria, who owns a small business and uses a fiscal year. That helped us understand the basics of how fiscal years impact filing deadlines. Now let's dive into a slightly more complex scenario involving David, a freelancer. David, like many freelancers, juggles multiple clients, each with its own payment schedule. He also uses a fiscal year, which adds another layer of complexity to his tax situation. This can make organizing income and understanding deadlines a bit tricky. So Sam, how should David organize his income information for his fiscal year filing?
The key for David is meticulous record keeping. Since he's paid on different schedules, he needs a system. Think of it like managing multiple bank accounts. Each client represents a separate account of income. He can use spreadsheets, accounting software, or even a dedicated notebook. The crucial part is tracking each payment, the date received, and the client it's from. This detailed tracking ensures he captures all income within his fiscal year, regardless of when the work was performed.
So, if I understand correctly, even if David completes a project in December, which falls outside his fiscal year ending June 30th, but receives the payment in July, which is within his new fiscal year, he reports that income in the new fiscal year.
Precisely, Taylor. Income is recognized when received for cash basis accounting, which most freelancers use.
That's a great point, Taylor. Now, David also needs to know the specific tax rules for freelancers. Sam, what resources can he use to understand these obligations, especially concerning his fiscal year?
The IRS Publication 17 is a comprehensive guide, though it can be dense. There are also excellent online resources specifically for freelancers. Professional organizations like the Freelancers Union provide helpful information, as do many reputable tax software providers. And of course, consulting a tax professional is always a good idea, particularly with more complex situations like a fiscal year combined with multiple income streams.
This is really helpful. I'm a freelancer myself, though I use the calendar year. I can see how easily things could get confusing with different payment schedules and a fiscal year. It reinforces the importance of having a solid system for tracking income. Just thinking practically, using separate bank accounts for each client might even be beneficial, right? That way, you have a clear separation of income streams.
That's an excellent practical tip, Taylor. Separate bank accounts can simplify tracking, especially when reconciling with your record-keeping system. It can make tax time much less stressful.
Absolutely. So to recap, meticulous record keeping is crucial for David. He needs to track each payment, the date received, and the client. Income is recognized when it's received. Resources like IRS Publication 17, freelancer organizations, tax software providers, and tax professionals can offer guidance. And as Taylor suggested, separate bank accounts can be a practical way to manage multiple income streams. Remember, for personalized guidance on fiscal year filing as a freelancer, consult a tax professional or use reputable online resources specifically geared towards freelancers with fiscal years. Don't go it alone. There's plenty of help available. So, Taylor, we just talked about Sarah, who realized at the last minute she hadn't filed her taxes. That can be a stressful situation, but thankfully there are options. But sometimes life throws a curveball, and you need more than just a day or two. That leads us perfectly to our next scenario about Lisa. Lisa's dealing with some pretty overwhelming personal matters right now and simply can't focus on her taxes. It's April, and the deadline is looming, but she needs more time. Sam, Taylor, what are Lisa's options here? Specifically, how can she obtain an extension, and what form does she need?
This reminds me a bit of Sarah's situation, but with more lead time, hopefully less panic. I'm guessing there's a specific form for requesting an extension. Is it difficult to fill out?
Yes, the form Lisa needs is Form 4868, Application for Automatic Extension of Time to File U.S. Individual Income Tax Return. It's relatively straightforward, especially if you file it electronically. You can find it on the IRS website, and many tax software programs include it.
Good point, Sam. Electronic filing is generally the quickest and easiest way to go about it. Taylor, our second question was whether an extension gives Lisa more time to pay her taxes. What are your thoughts on that?
That's a tricky one. I'd hope so, but logically, I'm guessing it just gives her more time to file the paperwork, not necessarily more time to come up with the money.
You're right, Taylor. The extension provides an additional 6 months to file, pushing the deadline to October 15th. However, it's crucial to remember that it doesn't extend the time to pay. Any taxes owed are still due on the original April 15th deadline.
Exactly. Think of our example from previous segment in this episode, the one asking a library for an extension on a book due date. You get more time with the book, but you still accrue late fees if you haven't paid any outstanding fines. With taxes, those late fees are penalties and interest.
So if Lisa knows she owes money, she should try to pay as much as she can by April 15th, even if she files for an extension, right?
Absolutely. Paying as much as possible by the original due date will minimize any potential penalties and interest. In fact, Form 4868 includes a section for estimating your tax liability and making a payment.
Let's recap. If you need more time to file, Form 4868 grants you an automatic 6-month extension. However, this only extends the filing deadline, not the payment deadline. It's wise to estimate your tax liability and pay as much as you can by April 15th to avoid penalties and interest.
This makes sense. So the key takeaway here is to file Form 4868 by April 15th if you need an extension, but also to estimate and pay what you owe to avoid penalties.
Precisely. And as always, consult a tax professional if you have specific questions or a complex tax situation. So, we just discussed Lisa's situation and how an extension can be a lifesaver when you need more time to file. But what if you're not just facing a temporary time crunch, but a whole different set of circumstances, like living and working overseas? That brings us to our next scenario featuring Alex, a U.S. citizen who's currently living and working in Japan. He's understandably a bit unsure about how his location impacts his tax obligations and deadlines.
This reminds me of a friend who moved to Europe last year and was completely lost about taxes. She wasn't even sure if she still had to file. It definitely sounds like a tricky situation.
It can be, and that's why we're here to break it down. Sam, let's start with the basics. What are the specific filing rules and deadlines for U.S. citizens living abroad?
While living abroad might change your life, it doesn't necessarily change your U.S. tax life. U.S. citizens and resident aliens generally have to file U.S. taxes on their worldwide income, regardless of where they live. The standard April 15th deadline still generally applies. However, there's an automatic 2-month extension for those living outside the U.S. and Puerto Rico, pushing the deadline to June 16th. This applies if your main place of business or post of duty is also outside the U.S. and Puerto Rico.
So if I understand you correctly, even though our hypothetical Alex lives and works in Japan, he still needs to file with the IRS, but he gets a little extra time?
Precisely. This 2-month extension gives expats like Alex some breathing room, especially given the complexities of gathering tax information from overseas. But it's crucial to remember, this is an extension to file, not an extension to pay.
That's a key distinction, Sam. So even though Alex gets more time to organize his documents and file the paperwork, he still needs to estimate his tax liability and pay any amount owed by the original April 15th deadline to avoid penalties and interest.
This sounds similar to Lisa's situation with needing an extension. The extra time is only for filing, not for paying. That's really important to remember.
Exactly. It's a common misconception. Now, Taylor, our second question was about resources for expats. Where can Alex find support specifically for filing as someone living abroad?
Well, the IRS website would be my first stop. They usually have dedicated sections for specific situations like this one.
You're on the right track, Taylor. Publication 17, Your Federal Income Tax, is a comprehensive guide, and there's a section specifically addressing taxpayers living abroad. Also, the IRS has international tax assistance centers that can offer personalized support. Beyond the IRS, Alex could consider consulting with a tax advisor specializing in expat taxes. They can help navigate the complexities of foreign income exclusions, tax treaties, and other nuances.
So let's recap. Even if you're a U.S. citizen living and working abroad, you generally still need to file a U.S. tax return. You get an automatic 2-month extension, giving you until June 16th. But remember, this extra time is for filing only, not for paying. Be sure to estimate your tax liability and pay by the original April 15th deadline. For resources and support, check out IRS Publication 17, the IRS website, international tax assistance centers, or consult with a tax advisor specializing in expat taxes. And that brings us to the end of another episode of Safe, Simple, Sound, Tax Edition, dedicated to helping you take control of your finances. I hope you found our deep dive into tax filing deadlines helpful. We covered a lot of ground today, drawing from the When Do I Have to File article, which provided a great framework for understanding those all-important IRS deadlines. We explored everything from the standard April 15th deadline for calendar year taxpayers like our friend John, to the complexities of fiscal years for folks like Maria and David, who run their own businesses. And remember Lisa's situation? Life happens, and sometimes we need extensions. We learned how to navigate that too, along with the special considerations for U.S. citizens living abroad. I think the discussion around fiscal year filers was particularly insightful, as it's an area that often causes confusion. Remembering that the filing deadline is tied to the end of your fiscal year is crucial. And as always, remember that filing on time, even if you can't pay in full, can save you from those unwanted penalties. Thank you so much for tuning in to Safe, Simple, Sound. Your support means the world to me. Be sure to check out the show notes for links and resources related to today's episode. And while you're there, leave us a review. We'd love to hear your thoughts. Also, don't forget to subscribe so you don't miss our next episode, where we'll be discussing more tax topics. Until next time, remember to stay informed, make sound financial choices, and keep seizing financial control. This is Alex signing off. Stay safe, simple, and sound.
That's all for this episode. If you found it valuable, don't forget to subscribe to the podcast. For more insights, you can join my newsletter at safesimplesound.com. If you would like personalized guidance, you can reach out to us at safesimplesound.com/contact. Until next time, take care and bye for now.